And a very good morning to you. I'm Malcolm Graham-Wood, and it's a joy to have you back watching another CEO interview. And today, my guest again is Dr. Robert Trice, CEO of Hurricane Energy. Welcome, Robert.
Thank you, Malcolm.
Great to have you back.
Thank you.
One of the early starters, and now with so much done, it's really good to have you back. Just as a starter, what I'd like to do, for those people who don't know that much, I mean, we'll be going into some detail during the interview, but a little overview of Hurricane for those who don't know.
Yes, certainly. So Hurricane is a company focused on the new play of fractured basement, which is granite effectively, getting oil out of granite. We're the first company to do that in the UK. It's a global phenomenon, oil from granite around the world, but we're trying it for the first time in the UK. And we're currently on track to have first oil from the first ever fractured field, that's the Lancaster field, in the first half of next year.
And you've already got a decent reserve base, which you've had by your CPR. So
that's when the CPR gives us around about 2.5 billion barrels of contingent resource. Contingent, of course, is contingent on a lot of other drilling, and we've got 30 to 60 million barrels reserves, which will be addressed by the two-well development at Lancaster.
Brilliant. Now, a lot has happened in the last 18 months since I last had you in the chair.
Yeah.
You have been, as someone said to me yesterday, ferociously busy. What's been going on? What have you been up to since the wells started to drill?
Still, so that's 4 wells back to back in 16 to 17. So that was 2 on Lancaster, and probably the most significant of those was the second of our horizontal producers. Then we drilled an exploration well on Lincoln, discovery, and then an exploration well on Halifax, another discovery. So that then led us into a fundraising, which turned out to be the biggest fundraising on the AIM market for an E&P company. So we raised over $500 million. And that money was raised to give us enough financing to take Lancaster to field development, which is, as we know, is a 2-well tieback. And, well, that's where we are. So, yeah, hectic is a very good description.
So, let's go through the Lancaster EPS, which is now called. You're getting much closer to the expected first oil date. We're now in June 18, so that takes us through to the first half of next year. So, how are you getting on? What are you expecting to achieve, and how's the process? We can probably go into the detailed sort of kit and everything else in a minute. But talk us through it.
What we're trying to achieve is basically test 2 wells under long-term conditions, understand how the reservoir is behaving and how the fluids are behaving, and from that information will then allow us to de-risk the full field development. So the EPS has threefold. Firstly, data gathering. Second, acting as a first step of a full field development for Lancaster. And the third is, of course, to generate revenue. And it will be generating very acceptable revenue.
Yeah, and the plan is, what, 16,000, 17,000 barrels a day in the...
Yeah, so basically net, we're doing about 17,000 barrels a day. Both wells turned on 10,000 barrels each, and then with downtime for engineering and weather conditions, it comes out around about 17,000 barrels.
Yeah, and the drilling, I'll come back to the other drilling on the other prospects later on, but the drilling that you're doing, on Lancaster is getting those 2 wells.
Oh, it's the completion. So basically, yes, we're undertaking completions. That putting the trees on. The trees are already on both wells, and we are currently installing electrical submersible pumps, which gives us better control over the flow rates of the wells during production. The other work that's ongoing is pilings and moorings over where the FPSO will be sitting. And, of course, the buoy, which is integral to the full development, that's sitting in Lerwick Harbour. So over the next couple of months, we'll see that attached to the rest of the moorings. And then, of course, the sailing of the vessel sometime later on.
I mean, you make it sound quite simple, really. 2 wells, FPSO, which is being refurbed in Dubai at the moment, and simple as that. It can't be that simple.
Well, I mean, as a development goes, it's probably the most simple you could get. I mean, we call it a field development. Of course, it's a field development, but it's effectively an extended well test, 2 wells. Now, we have drilled those wells. We've tested those wells. We're confident they're going to flow at high flow rates. I mean, the last one flowed at over 15,000 barrels. So,
so constrained.
Constrained by surface equipment. PIs are high, so we know that the reservoir can deliver. The wells, as I said, are drilled and ready. So all we're doing is taking an already built and tried and tested FPSO. Used to work on an Exxon field in the UK, continental shelf, North Sea. 90,
Yeah.
I think it
I
was
mean,
97% uptime, so it works.
It's
and we're
good.
not changing
And I've been
uptime.
lucky enough to be able to.
Visited, haven't you?
Yeah, I
Yeah.
went over to Dubai Dry Dock, which I thought was an enormously efficient place, and I've seen one or two around the world which are nowhere near as efficient as they are. What's is it going to plan?
All on track so far. I mean, I was out there, I think it was about a month ago. I'll be going out with our Chief Operating Officer, Neil Platt. We're going out in next month for a further review and update. Things are going on track. Fully expect to be following the timeline as presented at the AGM.
Yeah. And you seem to have a particularly good relationship with these first tier and second tier contractors. You've got, you've mentioned some extremely high quality, high tech kit, and talk me through the relationship you've got with these guys, because it appears to be pretty good. Your commercial agreements.
The commercial agreements were forged when oil prices was low and people had to think out of the box, and we basically have a contractual style where we reward success rather than punish failure, and that works for all parties concerned. Furthermore, we don't match the work. We say that you guys are experienced. Here's a sum of cash. You get on it. You tell us. You apply your expertise. So that's the plan, and so far it's working extremely well.
Is that new in the North Sea and the Shetlands and so on? Is it?
I think it's new for the industry, and the feedback we've had from other companies is that this methodology of dealing with Tier 1 contractors is something that other companies are now looking to replicate.
Yeah.
It makes so much sense on manpower and also it has a massive impact on cost, of course.
Yeah, so the cost, it's a cost advantage to you, but they still get, as if it was a normal contract, they still know that they're going to get paid,
of course,
with a margin.
Absolutely right, and the better we do, the better they do. I mean, take blue water, for instance. If the more we produce and the higher the oil price, the better they're rewarded.
And the subsea stuff is very efficient as well, isn't it?
Yes, I mean, crikey, TFCM, etc. They're very experienced in COD 204, and currently deploying kit for us as we speak.
So you're on target for first oil in the first half of 2019.
Yes, we are.
Which looks good, and at this stage, always looking good. I want to have a quick word about the Farmin negotiations that you had before and what you might have in the future. In the past, the data room has been open. I know that you had a number of potential partners who came in and had a look, but they appeared to wanted to wait for the EPS to actually work, and so you'll be reopening the data room, or is it never closed and they've been talking to you all the time? What's the plan, Farmin-wise?
Okay, so the farming couldn't happen at the worst time. You're trying a new play where the oil price is collapsed. And of course, risk is a major concern. And we have moved very, very quickly. So during Farmout discussions, the next minute we were drilling wells, and the next minute we raised $500 million to instigate the EPS. So I think what we firmly believe is that after 6 months to a year of constant production, there will be sufficient data that many of the outstanding risks have been answered. That's assuming, of course, that the reservoir behaves as we predict.
So it's reservoir behaviour, not just will it flow.
No.
It's more. It's
reservoir
because
behaviour.
It flows because of the test wells and so on.
Yeah, so oil type we know, flow potential we know, porosity and permeability we know to a very high standard. The question is, what will the fluids do over a longer period of time? Will water come in?
Yeah. So, and is that the 6 to 12 months, or is it 6 months to see how it's going to flow, and then another 6 months while people queue up to...
No, so it's the startup procedure that we have is between 3 and 6 months, and that's when we'll bring on the wells individually. We'll undertake technical aspects, so that's engineering aspects, but also subsurface aspects, so how the wells talk to one another, what's the maximum flow rate we can ascertain, what does longer shut-in pressures tell us about the reservoir away from the wells. And then once that's done, we will flow the wells at a constant rate, and then that really is the clincher, because it's how do the bottom hole pressures behave? Do we see water? Are we able to maintain the flow rates that we anticipate?
Yeah,
and that's really that's the nub of it.
Yeah, I'm interested in the other bits as well, to be honest, not just Lancaster, because I look at it and see Halifax, Warwick, Lincoln.
Yes.
perhaps you could give us some detail about where you go with them. You're going to I mean, all the money that you've raised so far is entirely to do the development as it is at the moment. But next spring, when you've hopefully started to flow oil and you've got cash coming in, you said at the AGM that you were planning to drill some more wells. We'll be on those prospects as well. I mean, you've got 930 odd million barrels waiting to be proved up probably by one well on Warwick.
Absolutely right.
Talk us through the other parts of the jigsaw.
Okay, so early oil next year. That's in the the early part of the first half will allow us to drill next year. We'll have enough revenue. So the question is, what do we drill? Well, we made it very clear that before we drill anything on Lancaster, we need to evaluate the data from the EPS. So that means we need to look at other than Lancaster. So what do we got? We've got Lincoln, which is we believe is a discovery. Is a discovery. We need to flow that, find out what the oil type is, and find out how the reservoir behaves. Will it behave like Lancaster? Will it behave better? I mean, it's a deeper reservoir, potentially, could be a higher flow rate. Warwick, undrilled prospect, clearly wants drilling, and we need to drill it by the end of 2020, so that's high on our agenda. And then, of course, as you say, Halifax, we've drilled that, it's suspended it currently. Do we go back? Do we undertake further work there? Or do we drill a new Halifax well to add even more data? So all those things are under consideration, but if we are on track for early oil next year, then yes, we will have enough funds to drill at least one well. Yeah,
and the value of the business. I'm going to come back to how you achieve value in a minute, but the value in the business is taken one step forward every time.
Absolutely right.
You drill one of those wells. So you need to get the money in, and you will then want to get drilling as soon as you can. West of Shetland appears to be sort of quite a fun postcode at the moment, doesn't it? I mean, there's a lot of people around and about you doing different things.
Yes.
And it was very popular in the 30th round.
It certainly was.
Around the recent 30th round. Talk us through the 30th round.
Well, the 30th round, I mean, I think it's seen an uplift of something like 75% in acreage position. There's a lot of action to the north of us. Shell and other majors are out there doing stuff. Rosebank looks like it's going to be coming on. Siccar Point, of course, with their discovery. So, yeah, a lot of action and a lot of prospective stuff to be found, because the geology is slightly different to the North Sea. And in fact, the early exploration phases soon found out, back in the 70s and 80s, that it isn't the North Sea, and therefore you have different trapping mechanisms, different play types, and the potential there is great. I think it's the biggest growth potential for the UK continental shelf. And then I think once the West of Shetland really starts to unlock its resource base, there'll be rationale to look further down towards Ireland, for the whole of the Atlantic margin. There'll be similar plays to chase, basement as an example.
So you mentioned wells and buoys and FPSOs. What the shareholders might expect in the way of news flow?
Oh, news flow, news flow. Likes a bit of news flow.
I'm afraid they do like a bit of news flow, Robert.
Yeah, well, I think we'll be seeing something very soon. I mean, let's look at what we have already indicated we're going to do an RNS on. So there'll be an RNS on when the wells are completed, because once the rig goes, then that's an RNS event. Once the buoy's tied into all the moorings and it's just floating on its own, that's another notifiable piece of information. And of course, when the boat sails. But I must just have a bit of clarity there. The boat will actually do a bit of a tour around the harbour, a bit like the Saucy Sally going around the lighthouse. That will not be the sailor.
That won't be considered to be sailor.
So the boat watchers, if they see the thing shooting off, it doesn't necessarily mean it's on its way to Lancaster. But once it is,
a 6-week trip, did you say?
Yes, it'll about 6 weeks, and it'll be stopping off in Holland to have the flare stack attached. So but we will make an announcement on that, and of course we'll make an announcement when it's attached to the buoy, and we start the commissioning phase. Yeah.
So shareholders can expect to know almost every step of the way, and then there'll be a final time when you keep to yourself while you're getting it all sorted out. First oil. So that's most exciting. You must be very excited. As we get towards the end, the one question I want to, I know that everyone talks about it. They talked about it at the AGM. And we talk about selling the business, or selling part of the business, or selling it by assets, or farming out. As far as I see it, there are a number of different ways of doing this. I mean, assuming you're not going to have an unexpected takeover bid, have you got plans in terms of selling the business in toto, or would you like to say, right, because we've said we've got all these wells to drill on Warwick and Halifax and Lincoln and so on, you know, those are unexplored value, but you're pretty sure you know that it is
Absolutely
in there.
right, yes.
Would you want to do a farm out of Lancaster as a part of it, or what's your thinking in terms of long-term value creation for?
Well, actually, our thinking is really, I would say, I won't say it's irrelevant, but it's the interested parties thinking. And we tried to farm out Lancaster on its own. All the interested parties said, no, we're interested in everything. So it's very clear that anyone that comes in will have an eye on the broader play and the broader portfolio. So as a management team, what we've got to do, and as you've hit the nail on the head, we've got to add value by drilling material wells as soon as possible. So that ideally, if we've significantly de-risked parts of the portfolio that are currently sitting in low contingent or prospective, that puts us in a stronger position for doing a farm out. And what that farm out is
it's almost impossible to tell, isn't it? Because you might say we'll sell 50 to 70% as a farm out with operatorship, because you always said you're never going to operate this.
You're quite right. Full field is not for us. I mean,
so you might sell 50 or 60 or 70% and operatorship, but Hurricane might still be in business doing other things.
Yeah, I mean, the point about Hurricane, right at the beginning, the idea was to demonstrate that you could take a basement from an exploration to development. So proof of pudding would be Lancaster, and then you could do that anywhere else around the world, because basement is probably the most underexploited play globally. And
other basements in the west of Shetland that you haven't?
Yeah, there are.
And you've got other things.
I couldn't possibly tell you, but yes, there are. There's basement opportunities, UK continental shelf, Norwegian continental shelf, and other parts of the world. No question. All you have to do is to look at the map of where basement is being produced.
Well, I mean, you're
today.
the experts. I mean, you know, and you might like to, you know, Hurricane could exist still with 30% of all these things that you've got.
Well, there's a lot of oil there, isn't there? And there's a lot to share, a lot to go around.
Yeah. Now, we really are running out of time. And at the end, as you know, I always ask, but this is the question of where you're going to be in 12 months' time has never been more pertinent than to ask Robert Trice, CEO, because we're in the last week of June, and in 12 months' time we'll be in the last week of the second quarter and the second half of 2019.
Absolutely right.
Tell us where you'd like, or your
where
vision.
I'd like to be. I'd like
to
certainly be producing oil. Certainly to have answered some of the key engineering questions and some of the important geological questions about how the reservoir is talking across that interwell space, and sitting back watching a constant flow rate. I think I'd like to be there.
And with the shares are 50 or just below 50p at the moment. My valuation is way in excess of that, but presumably it's a question of adding on as you go. You're probably the most thing. I mean, not that you don't have any worries. Yeah, sort of like the CEO Tarek never has any worries. But more importantly, actually, you may have operational worries. You know, these things are going to happen. But your biggest worry must be that you don't want to sell the business on the cheap.
I don't want to sell the business on the cheap, and I'm sure our shareholders don't want to. And that's the point. Any offer that we have, of course, it's down to the shareholders. If they want to sell the company, it's their company.
Well, that's what happened at the AGM, and it's a fantastic job that you've been doing, Tarek and Robert. Thank you very much indeed for coming in yet again to be grilled on the CEO interview. It's been a great pleasure to have Dr. Robert Trice, the CEO of Hurricane Energy, in for our Core Finance TV CEO interview. I've been Malcolm Grahamwood. Thank you very much for watching, and looking forward to seeing you again soon. Bye now.